Good morning, good morning, good morning, good afternoon, and good morning to you all. And my name is Silver Bullet. I am an ICT student, and my trades are based on the Silver Bullet sessions, which I have been making research on, and I have documented and I won't say that I am very, very, very perfect at it, but I wanted to be documenting everything regarding the session, how it plays out, how I place in my trades, and how I document my trades by seeing everything that I do, which which won't go right, my decisions. I go back and play those videos because I believe I might be doing everything in front of everyone, so I force myself to follow the rules. It's hard to follow the rules, but at some point you need to force yourself after having so many losses and so many issues regarding not following the rules. You would end up, at the end of the day, you will end up forcing yourself to just do it, no matter how it takes. You have to say, oh, this is it. I have to follow my rules. And though even if you follow your rules, it's not every day that your trade will go according to what you planned. But either way, following your rules is the best option for you as a trader, because with that you will be proud that you are trying at least to be a better person in the market. So this is the NY session. Today I am going on a live stream for a friend, I believe. So technically, I might say some traders have some different types of idea of how the silver bullet works. Some might have a directional bias, but I believe from my own understanding, the directional bias is that from the first moment you place in your trade, if it is the silver bullet session, you should target the next possible liquidity, either a high or a low. That should be your next take profit. And from what ICT I learned from ICT, the maximum, like you said, the maximum take profit that we should have should be always and always. The maximum take profit we should have should be always and always be 20 pips, and our stop loss should be always at average at 10 pips. So for now, I am waiting for my timing to come through so that I can be able to start looking for the first value, first fair value gap I can identify in the silver bullet session for the New York session. And if before the time comes, I think I should do some little explanations. Though from my own research and from what I did, um, I do not actually trade Mondays because Mondays is the start of the week, and majority of the time on Mondays, I tend to, from my own, um, from what I've done in my research and on NFP week, the first week, there's a lot of on the Monday, price always tend to fail or a fair value gap does not present itself. But for today, I saw the fair value gap it presents itself, so I followed my trading uh, strategy and plan and rules, which I refuse to trade it. But I will do some little explanation and on the London session. So as you can see, um, on the London session, I believe on the London session, uh, the first thing first that we have to do in the London session is that from the London session, like ICT say, is that the silver bullet session is between 10 a.m. to 11 a.m. It happens on the 10 a.m. to the 11 a.m. You can use your 5 minutes still as your time frame for for entries, and you can also go lower, maybe the 1 minute or the 3 minute, but majority of the time I believe it's the 5 minutes that you can see the fair value gap visible on the market. So for me to have more clarity in the market, and I try to expand the zone of that silver bullet session, and let's point out how I do mine. This is from the 11 a.m., which is this, but I have to expand it to maybe, let's say, 11:10 a.m. 11:10, that is 10 minutes past. Same for the starting of the session. I go back like 15 minutes. The session starts from 10 a.m., but I have to expand my zone to start from the I shall start from the 9:45. Then I can look for my entry immediately the session starts. So on this case, after identifying this structure, I believe the first fair value gap we identified might be, can be this. But if you can see that on this part outside, the price has already respected this, so it's not something that we can consider when we have our price coming into the zone, the silver bullet zone. Next up is after we have right into the zone and the price kept working and working through and working through, this is the first value gap that was identified, as you can see. This was the first value gap that was identified in that zone. And at what at what point did it reach that fair value gap? The fair value gap was met around 10:35, which means from between 10 a.m. to 11 a.m. dot, you will always and always identify that a fair value gap is being respected in this time frame, and which will signify for you to enter a trade. And the directional bias is that you have to target the next liquidity, and always like how I do my own things is that if I made a trade here above, that is above here, above this channel, that is fair value gap, I always make my um sorry. So I always make I always make sure that sorry, I need to check something. Okay. I always make sure that my stop loss is always almost to 10 pips or close to that. It has to be 10 pips, because ICT taught us that whenever we are going to target the market, we should always target 1 to 2 and 1 to 3. And for me, this is what I can do concerning my own strategy. I can say, okay, this is my stop, and I can set my take profit to be at 20 pips. And as you can see, the market even respected the silver bullet chill zone in the London session, where it even tapped in the take profit right in that time frame. And for me, from what I understood, was that the silver bullet doesn't have directional bias from the higher time frame. From what I understood, not from what ICT said, because his only teachings of what I understood is different from what someone has understood also. And the first thing first is first thing first is point out your kill zone, wait for the market to start at 10 a.m. and wait for the market to respect the first fair value gap. It should be maybe outside, and sometimes you might even occur to you that you might not spot a fair value gap, and sometimes it might occur that you might not see a fair value gap outside, but you will spot the fair value gap inside that kill zone. That is from what I have done my own research. You might maybe see a fair value gap outside and it will touch it. Sometimes you might see a fair value gap, you might not see a fair value gap outside, and the fair value gap will form inside the kill zone, and you can place in your trade. So this is for the London session from what I've seen. Today I'm doing a little research again on Monday of the NFP week to see what the market does and how it presents its opportunity for today in the silver bullet session. So for now, we are going to focus on this. We are at 15:45, and like I said, in the silver bullet session for the ICT, it's always at from 16 That is from 4 p.m. if you are on the +1 GMT. We are from the +1 GMT. It is always from the 16, that is from the 4 p.m. to 5 p.m. It always presents itself. It's always presents itself in this area. That is this time frame of the New York session. How I like to key out my possible fair value gaps is that I wait until the market is around this axis at 3:45 p.m. I'm placing this. Then I wait for the market to reach at 4 p.m. before I start to look for the first possible fair value gap for me to make a trade. Either a bearish fair value gap or a bullish fair value gap. Whichever presents itself, I click in and trade this. So for now we are going to wait for the market. Seriously, I don't know how many people are watching this, but I know I'm not doing this for anyone, but for me personally, I am trying to document my trades, which I do like. And me documenting this live means trying to follow my trade rules. Someone might be looking at me and is noticing this, but I am doing this for me. But today, personally, like I said, I'm doing it for a friend of mine. She's actually under the guidance of me, teaching her how to trade. And though things are going well and might not be going well, she has the knowledge, is the application that she's still struggling with. So that is that for now. And we are going to wait for the market. Need to change. Let's wait for the markets to do what it has to do for us to place a trade in the market. But for me, it depends. I might not trade today, and I might trade today because I have to avoid the Mondays. I always have problems with trading Mondays because I tend up to having more losses on Mondays than on any days. Like I said, it depends. I might place in a trade today. And it depends. I might not place a trade. Mhm. I seem to see that in the exception there's no much volatility, just like in the just like in the London session. But the big London session is much more volatile than the New York. But we have to wait and watch and see. Um, okay. Guys, I have to check the um, Monday. There's not much high impact trades, like how high impact trades. I mean, um, this is on next liquidity on, and this can be next liquidity on too. That is the first value gap we have, but on the outside, but you can see the price has clearly disrespected it by closing below that fair value gap. So we can't we can't identify this as our main fair value gap to to anticipate. So I'm going to still wait. This is clearly not working. This volume and between these lines can become our fair value gap if the price closes below. If the price goes right to this extent, this fair value gap has already been filled. So we are waiting. This is already 4 p.m. and the price, this is already 4 p.m. and the price has started, the volume has picked. So we're going to see if this is going to close on this axis. If it closes, we can anticipate this as our fair value gap above. If it is closing above, we cannot identify this as our fair value gap, or fair value gap has been filled. So waiting for time. We're going to anticipate the trade in the market, and the market might not respect this fair value gap and maybe create another fair value gap on this axis for you to look at entry again. But for now, we are waiting. Now we are waiting and we are watching what the market is doing at the moment. Like I told you, this is a fair value gap, but I told you, immediately you see price closing below the candle or close, it violated below, it's the price went below that candle, aggressively you should just not trade it. Okay, this is the first candle. So we are going to see if the market is going, if the candle will respect this fair value gap, if we are going back, and if it doesn't come to it, we can wait for another possible fair value gap to present itself for us to make entry again. And if the market violates this fair value gap, we might look for a possible bullish fair value gap again, but our anticipation right now is just bearish fair value gap that you can see at the moment. We are waiting for the market to go above this candle that was created, and the market was just then a trade can be placed for yourself. Like I said, if I'm targeting this market, my stop loss has to be at 10 pips, and my stop loss has to be at 20 pips. But market will always go for the next level in liquidity. But for me, like I say, the market has to be targeted at 20 pips at maximum. So that's what I watch. For 2 minutes, and nothing still, nothing. So that's why we have to follow out our rules. And one of these rules is that when the market has not respected the first value that you identified, you just leave the trading for that day. If you've missed that fair value gap, leave it for that day. If you can't identify any fair value gap for that day, leave the trade for that day. You can. There are many other days to for possible opportunities in both sessions, both the New York and New York and London session. Now let me go to one of my favorite pairs. If I give us something that we might need, and we go to the USB. The market is choppy at the moment. The market is very choppy at the moment, so this is not considerable to trade. That this is the reason why I don't always trade on Mondays, because there's no clarity when it comes to identifying the fair value gap in the silver bullet candle. That is why I stick to other days of the week to look for my next possible fair value gap. Going back. This is the first year open, that is 230, and this is the open of the equities. My price has to make a little run above the session. So we consider this as the accumulation, and uh, this is the manipulation, as this is the high of that session of the open. So this could be the manipulation because it's just violated this high and started coming to training of bearish, and we'll still be looking at the market because the market doesn't respect the this value that was spotted. So if it doesn't, we'll still look for a next possible fair value gap. And if we can't identify any fair value gap inside this session, any fair value gap that presents itself outside this fair value gap is not representable for me to place a trade. Always and always, my fair value gap has to be only in this section, the one that the one the rule states that you should identify the first fair value gap may be outside or inside the silver bullet section. You first identify the first value gap before the silver bullet section or inside the silver bullet section. If you can see a fair value gap in the silver bullet section, you should ignore it and wait for the possible fair value gap to present itself and make a trade. And if it doesn't, you should avoid trading anything outside. There's a PM session for the silver bullet, but I prefer the morning session of the silver bullet because I can't be like ICT. ICT is more experienced and has much more clarity of what the market does. You can trade the way he likes, and you can avoid at the time that you can avoid. But for me, I have to follow my own rules. I believe that what I have to do as a trader who is trying to reach my success in trading. We still have time as well, almost 60 I think we have 40 minutes still, or 40 something minutes, 5 minutes for the silver bullet session to be over. So we still have time. We have to wait and watch what the market does. You can see, like I said, any fair value gap does not respected and the price loses right below the fair value gap is not representative to make a trade for that. Go to the small time frame and you can watch. That also possible fair value gap. Respect that. Let's be looking at the 5 minutes. That is our main goal. Let's go back to the 5 minutes. Some make those some of their entries on the 1 minute time frame, but for me, I like to enter my trades and also identify the silver bullet session, the time frame. It's more clear for me to understand what the market is doing. One of the hardest things to do in the trading is to wait, is to keep your hands off the charts. Like just watch without placing a trade. That's one of the hardest thing I've learned because my body, that is, I've always been eager to make a trade, but having so many losses taught me the hard way. I should always and always follow my trading rule. see the market is still downward. As we can see, the market is still down to this fair value gap might be not respected. So the best thing to do is to wait to look for the next possible fair value gap to be respected or else to place a trade. This is also a clear fair value gap since price hasn't come. Show this same as this, but it depends on what the next candle does. So we're going to see what this candle does before we can look for the next fair value gap. As you can see from outside, there's another fair value gap that occurred. But this is not the narrative of what I am targeting. This is not the narrative of what I'm targeting. But I'm going to watch clean closely. This is also outside the closing. I'm going to see what the market is going to do. If the next candle closes below this candle, or this candle closes below this candle, I can see that this is not clean fair value gap. So from here, I have to delete it same because that is not my target. My target is around is for the bearish. I know if you would say that we should have just placing a sell option around here and blah 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 blah, the markets will give us a win, but this is not how I planned out my trades. It has to respect what I have set aside for myself before making a trade. So you can see this is a clean fair value gap also. If it doesn't respect it, there's no way I can place a trade in that market. Just give me a moment. I need to look at a smaller time frame. There's a possibility of this trade or this price to be respected. As a canvas of this, we want to be respected before it goes away. But we are going to work on 5 minutes. Waiting for the price to respect. And if it closes above, this means this fair value gap is invalid. And this fair value gap is valid. But our main aim is for this fair value gap. That is, we are looking at the bearish part, not on this bullish. We are looking at this bearish. I look at the market, what it does. If the market goes below again, we look at this. If this market closes below, we are going to still look at this to be our second fair value gap too. That price can come and touch it before going forward to take at this low. This is another low that the market can take off. This is another low. this candle has to close before we know what the market is doing. So for me, and what I've been targeting is that the market will come to this axis before for the next possible round of liquidity to be taken. So this should be my main area of interest. So this is the close of this candle at this moment. So we are waiting for the price to tap into this zone for us to make a sell option. And since the fair value gap above is expected, then we expect this next fair value gap to be respected. We expect the market to tap into this zone before going below. And it remains any trade in this session. The best thing we can do for ourselves is just ignore the market for that day and just wait for the next day to present its own possibilities and then we can make a trade. Yeah, so everything from market chart, meet up on this point. And if it doesn't, still okay with it, to not placing a trade in the market. We are still waiting for the market to respect this fair value gap. This is a 1 minute time frame, but for me, I do not always place in my trades in the 1 minute. So I wait. I still have 32 minutes for the silver bullet session to be over. So if we still don't identify any possible fair value gap to be respected, I can see it. For me, I am done for the day. I'm not good at as ICT, because he will possibly look for areas to click on and make his trade. But for me, I've passed the learning phase and I am on the application phase, which is pretty hard for me to just make stupid decisions. So I have to stay with my rules and do what I have to do. So we are still looking at the fair value around here. There's possibilities that price might still touch this, maybe outside the zone, but like I said, you have to wait. One of the hardest things to do in trading is to wait, is to keep your hands. Um, um, we are still looking at the market. We just need the market just to tap into this zone. That is all we need. The market to tap into this zone, and we're going to make our trade for the day. And if it doesn't, we leave it. We have 20 minutes remaining for the silver bullet session to be over, to determine if we are going to place a trade or not. Just 15 minutes for the morning bullet milk session to be over. Um, yeah, 10 more minutes. This is accumulation occurring at the moment. So if you go to the lower chart, you'll see it more clearly. As you can see, there's accumulation in this zone. So there's possibility that the market will come to this fair value gap, tap on it, and look for the next possibility and next liquidity to take out. I'm expecting for it to meet up at this point or inside this zone. But if it meets outside, I cannot break my rules by trading outside the zone. My has to be inside this. It has to be inside. Whatever I'm going to target has to be inside this silver bullet children. So we'll keep watching and waiting. So I see also on the type train and type thing. It's the same thing. And there's possibility that outside the zone, the price will tap into this fair value gap before going below. fair value gap. So move it out 15 minutes late. Like I said, I have to sort out the zone 15 minutes early and 15 minutes late until this is what I do always. But if you have to follow to respect what the ICT says, you have to rotate out in this zone. But for me, I have to filter it 15 minutes late and 15 minutes early. So we're still looking at same Friday value that Because I'm trading on a prop account, there's no way I can break my rules. Um, it's a very, very highly risky for me to just decide to place a trade. This is why I have to always keep my hands down until the market gives me what I am expecting it to do. Not what I'm expecting it to do only, but what my strategy tells me to do when I see the right thing. So I'm still watching. If it doesn't respect the fair value gap and the silver bullet session is over, and I am done for that day. So we have done for the day. We followed our rules and moving towards the markets. The ICT silver bullet strategy shows off. And as you can see, this has been violated quite nicely. But if the market closes below the fair value gap or above the bearish fair value gap. We should know that that's fair value gap has been violated and the market is going for another liquidity somewhere else. And if we can look to the other, we can see there's possibilities since they are positively related, correlated, but there's tendency where markets might meet a fair value gap and another clear event meets up with the fair value gap. And let's see to our Nasdaq. Same thing. The fair value gap was not respected. Here is a fair value gap, and I believe outside the scale when there's possibility of this market to come and tap into this fair value gap before going downwards. Same for the US 30. We have the fair value gap. This is the 45. But you can see this fair value gap also expected in the 5-minute time frame because it went above these two candles, so it's expected this fair value gap. If we go to the gold, you can also see our session starts from here and ends at 5 p.m. It starts at 3:30 p.m. and ends at 5 p.m. And you can see there was a fair value gap here. There was no fair value gap in this part, but that you can see at 4:35 p.m. a fair value gap was respected. So if we were trading the gold, there's possibility that this is a very clean fair value gap that was respected for us to place a trade and look for the next liquidity for the market to run into it. And if we go to the currencies, that is the AUD USD, there's possibilities too that the fair value gap might have been created, but the market didn't respect it. As you can see, there's a fair value gap here. You can see that is from the 3:45 to 7 and to 5 p.m. 3:45 p.m. This is also another fair value gap that occurred, but no, the market didn't respect it enough to give us a sell option. So we sat down. We sat on our hands to just see what the market is doing for today. And I didn't intend to place a trade today. You can also see even on the oil, that is the Brent. This is the silver bullet silver, as you can see. But that's I still have to keep it 15 minutes late. This is a fair value, but it has not been, price has not yet interpreted. And there is no any fair value gap outside. You can see there's no any fair value gap. There's no any fair value gap. So we have to expect a fair value gap to be representable in this kill zone before we make a trade. So for now, for me, I still have 5 minutes remaining for it to be over, because this is the main point of interest for me to place a sell order if the market would have respected this fair value gap. We would have entered our trade and the market would have given us what we needed. But you can see there's much volume again. And the market still, if we go to the smaller time frame, there's no any fair value gap that you can see that was respected, and this previous low was already taken. This previous low was also a target for us, and it was already taken, and the price was there. And claimed it. So we still have 5 minutes remaining. Here's another fair value gap, I believe. There's another fair value gap. And this price might close around this annual summit. Right at that very moment before the my own silver bullet to be over, I can place in a trade right here in the market will continue seeking new possible liquidities. There's still time. This is 5:09. So by 5:15, if the price hasn't respected any fair value that I can see, then I am done for the day. So better if the fair value that is respected, but it's not a problem for us. I forgot that I was on the 3-minute time frame, so I'm still watching. Next will be this, and I'll take profit. I'll be at 20 pips. This one is approximately, it's 20, but approximately I just put it here. The next candlestick, if this close, we should look at the next candlestick. We should tap onto this fair value gap, and then goes below. And if it violates this, we are still going to see what decision we have made. So for now, let's see at the market. Okay, clean. So here is the fair value gap between this candle and this candle, and the fair value gap. So the next candle for the fair value gap meeting it as this candle. And as you can see, the price of the market and the fair value gap has been respected. Has been respected. Price of the market has been respected. And you can place in a sell order option, and you can see the fair value gap between this candle and this candle is a fair value gap between them. So for now, since the fair value gap has been respected, we can place in a sell order options. So let's see. This is against my trading box. You will see. So I'm going to lower my sell, that is my risk, to be at 1000. That is 10 pips, and the sell take profit should be at 20. So let's see. The market has already started working through. That is, since I've already entered my trade, that is right before the close of my silver bullet, because my silver bullet is stopping at 15 minutes late. So since I clicked and this fair value gap was respected, we are targeting 20 pips for the market. We're targeting 20 pips. Stop. That is take profit stop. And our sell off should be 10 pips. This is what it's supposed to be. So let me delete this and remove it for more clarity. So you can see on the 5-minute time frame, there's another fair value that was presented to you, and the market can still come to this axis, tap in this fair value gap if you're going for a sell option. Or whatever the market gives us, we respect it, because our entry has become that we made an entry at a 3-minute time frame. So the market respected this fair value gap, and our time frame to look for an entry and the silver bullet has been over. If it is outside this kill zone, then I have no option again to look for a sell. So another silver bullet. So the market can tap in to this is my stop loss above. So the market can still touch into this fair value gap for going downwards. And this is for the 5-minute time frame, like I said. Let's look at the 5-minute time frame. Okay, you can see on the 5-minute time frame, the market just touched this fair value gap. Same as what I was expecting to occur. There's a little delay on this. That price has to be yeah. So if the market stops us out, doesn't mean that we have gone against our rules, but it shows that the market is always right. So we are still looking at it. If the price closes above, it means that this fair value gap is invalid, and it closes above this fair value gap. We're not supposed to trade the silver bullet on Monday, but like I said, let me just place a trade, and which means we have gone against our trading rules. But I was doing this for a friend to just watch and see what the market is doing and where to spot in your possible fair value gaps, because it was very hard to explain clean. So you can see the market has violated this fair value gap. So there's possibilities, like I said, the market is coming to respect this fair value that we have above. But since it's already past our silver bullet silver, we are going to leave it for today, and that is it for today, and thank you. So tomorrow we are going to come again to spot the possible fair value gaps we can see in these sessions. Thank you.